My investing strategy is pretty simple. Buy high quality dividend paying stocks at reasonable valuations and wait. I enjoy finding deals when shopping at the store, but something I love even more is finding deals in the stock market. After all, when a stock price goes down, a dividend yield goes up. And in today's video, we are going to take a look at 3 of my top dividend stocks to buy in the month of November. But before we jump in, I want to send out a special thank you to The Motley Fool for sponsoring today's video. If you go to fool.com/Mark, you could sign up for a list of their top 10 stocks to buy now. And with that being said, let's jump into the video. Hey everyone, Mark here, back for another video. And if this is your first time joining us, welcome. On this channel, we discuss building wealth by utilizing dividend stocks. And if you're new to investing, definitely check out the special promotion being put on by Webull, where if you open a new account and deposit any amount of money, they will give you up to 12 free stocks valued up to over $30,000. So definitely take advantage of that promotion. Link will be down in the description below. The stock market has humbled a lot of investors in the year 2022, and especially if you're a new investor that may have just started at the end of 21. All you have seen is down days, down days, down days for the most part here in 2022, and you're probably asking yourself, does the stock market ever go up? And the answer to that is actually the stock market only goes up in the long term. If you take 20 consecutive years, any combination of 20 consecutive years in the S&P 500, you will not find any combination where you come out with negative returns. The hardest part about investing sometimes is being patient and waiting. Investing over a long period of time is a proven way to build long-term wealth. That is why I prefer time in the market over trying to time the market. And with that being said, we are stuck right now in a full-fledged bear market, which is providing a lot of great opportunities to build your portfolio with high-quality dividend-paying stocks at very cheap and reasonable valuations. So with that being said, let's take a look at 3 of my top dividend-paying stocks to buy in the month of November. Dividend stock number 1 is Rowe Price, stock ticker TROW. Rowe Price is a global investment management firm that provides services for individuals, institutions, and retirement plans. The firm manages equity and has their own set of mutual funds. The performance of the company is largely tied to the performance of the overall stock market. On the year, shares of Rowe are down 45%, which is not much of a surprise considering where the greater market is right now. After all, a large portion of Rowe's revenue is tied to that stock market performance. If you think about it, they earn investment management fees. If you have 10 grand invested with Rowe Price and they charge you 2%, well, if that 10 grand goes down to 5 grand due to poor stock market performance, well, they're still getting their 2%, but their base is much lower. Combine that, they're getting a double whammy. Stock market performance is down, and there's also investors that are running for the hills. When volatility gets high, and especially when we enter a bear market like we're in right now or go through a bear market, you'll see a lot of investors take their money out of the stock market, which is a cash outflow, which also trims their assets under management as well. The company recently reported their Q3 earnings, which saw $24.6 billion in client cash outflows. Revenues fell 18.7% year over year, and adjusted earnings per share fell 50%. However, the company still has $1.23 trillion in assets under management, and they have $2.8 billion of cash on hand. When the market does finally turn around, which a lot of economists are thinking we are a lot closer to that than many think, shares of Rowe will sky higher. In the meantime, investors are receiving not only a high yield dividend of 4.5%, but they're also enjoying dividend growth. Over the past 5 years, Rowe has increased their dividend at an average annual rate of 15%. They have increased that dividend for 35 consecutive years and counting. The dividend is also well covered with a payout ratio of 50%. The second dividend stock for the month of November is Avalon Bay Communities, stock ticker AVB. Avalon Bay Communities is a real estate investment trust, or a REIT, that develops, acquires, owns, and operates multifamily apartments across the U.S. The major markets include New England, New York, the Pacific Northwest, and California. All of these are leading metropolitan areas with higher employment and higher wages. They also happen to be regions with severe housing shortages. Avalon Bay has more than 270 apartment communities, which make up over 80,000 apartment homes. All of these are located in 12 different states, including Washington, D.C., and their apartments are actually in high demand as well, with a 96% occupancy rate. When it comes to revenues, Avalon Bay saw 12.9% growth, which a major portion of this came from rental lease increases. Looking here, you can see how the company has increased its revenue over the past decade, which has led to growing cash flows from operations at the same time. Over the past 12 months, revenues have reached nearly $2.5 billion, with cash flows from operations reaching $1.3 billion. When it comes to valuations, you must remember with REITs, we don't look at EPS. We look at what is called FFO or AFFO, which is funds from operations or adjusted funds from operations. Currently, shares of AVB are trading at an adjusted funds from operation multiple of 19 times. And over the past 5 years, shares of AVB have averaged closer to 22 times. So you can see the disconnect right now, while shares of AVB do look quite intriguing. On the year, shares of Avalon Bay Communities has dropped over 30%. Much of this tied to a rising interest rate environment we are currently going through. In terms of the dividend, Avalon Bay has a dividend yield of 3.6%, which is plenty safe with an AFFO payout ratio of 71%. The third top dividend stock to buy in the month of November is Prudential Financial, stock ticker PRU. Prudential Financial is one of the largest insurance providers in the US today. They have a very well diversified portfolio, and after all, the insurance business, even though it is boring, the model is proven. Not only do insurance providers collect premiums, but they take those premiums and reinvest them into things like stocks and equities, or bonds, fixed income, and even real estate. After all, these insurance providers, over the long term, tend to collect more in premiums than they pass out in claims. Prudential also has an asset management division, which collects investment fees or management fees very similar to those of Rowe Price, which we just took a look at. When it comes to revenues with this insurance provider, revenues can look a little seesaw at times, but over the past 12 months, Prudential has generated over $70 billion in top-line sales. When it comes to the dividend, Prudential is more of a stock that income-oriented investors like. They have a high yield at 4.6%, but the dividend has also been growing at an average annual clip of 10% over the past 5 years. And the company has increased that dividend for 13 consecutive years and counting. The dividend is also plenty safe with a payout ratio of only 40%. In terms of valuation, Prudential, and just like many other insurance providers that are out there, isn't really an expensive stock. It's not a growth stock, so you're not going to get growth-like multiples. Over the past 5 years, shares of Prudential have traded closer to 8 times earnings. Right now, the company trades at 9 times earnings, and a lot of analysts aren't putting much weight into 2023. The future isn't that bright, is what they're saying, in the near term. However, I think a lot of analysts may have that wrong, and I think 2023 can be a big year for the company, which makes these valuations right now look that much more intriguing. So that's a wrap on our top 3 dividend stocks to buy in the month of November. These 3 stocks couldn't be more different. We have an investment management company, we have an apartment REIT, and then we have an insurance company. And if you own any of these 3 companies, let me know down in the comments section below what you think of them. And also, if you enjoyed the video, make sure you do hit that thumbs up and consider subscribing, as it greatly helps the growth of this channel moving forward. I hope you enjoyed the video, and we will see you next time. Take care.